Welcome to Business Talk with Meghan McNulty, the podcast that takes you behind the scenes of business success and reveals the strategies, insights, and stories that drive these professionals to thrive in the ever-evolving world of business. Whether you're an established entrepreneur, a seasoned business owner, or simply fascinated by the world of commerce, this podcast is your front row seat to learn from the best. Each episode, Meghan will bring you engaging interviews with professionals from diverse industries who will share their triumphs, lessons learned, and the insights they've gained along the way.
Daniel, thank you for being here today. We've talked to you before, and I wanted to talk again because of what's happened in California with the recent fires that have devastated several families and individuals and homes, and it's been a topic of conversation. So if you don't mind, can we just get right into it on how the recent California wildfires have affected the home insurance market, also the commercial industry as well?
Yeah, it's the main issue is the response from the carriers. Obviously, even well before these fires, we've had plenty of issues with carrier and product availability in California. A lot of the insurance companies already were very weary about doing business here. And this is exactly why, unfortunately, something like this massive of a scale of a claim event, it really just solidifies why the insurance carriers are nervous. So how it's been affecting it in the immediate term is you've seen a lot of reactive moves from the insurance companies, right? That we've had a lot of them have completely just paused business in LA counties and the surrounding counties. Those are just starting to get lifted where they will start to write certain areas again, but a lot of them just completely shut down, which definitely puts a lot of strain on the home buying market, people trying to get mortgages, needing homeowners insurance. And so that's definitely made it difficult for them. And in the long term, we are going to see all of these insurance companies reevaluate whether or not or to what capacity they want to operate in the state of California. Because they need to get a handle on being able to charge the appropriate rates for things like this that may happen again in the future. And they have to make sure that they can remain profitable and work with the state on that. So I think it's going to get, unfortunately, tougher as far as from a product availability standpoint in California.
Yeah, and I mean, I understand that we can't put insurance companies out of business. I get that, but I think what people are confused about is why have a lot of insurance companies pulled out of California and are refusing to cover certain areas?
It's two parts to that. So most of the ones that are pulling out of California or have stopped writing certain areas are admitted insurance companies. And in California, there's two main different types of insurance companies. There are the non-admitted insurance companies and the admitted companies. The admitted companies are the ones that everyone's kind of familiar with, the Allstates, the State Farms, those brand names that people kind of know and recognize. And they have to follow the very strict guidelines set forth by the Department of Insurance. And part of those guidelines are around rating and what they can and can't do and where they insure and just how they operate. And so if you have to follow a regulatory body, then you need that regulatory body to kind of work with you so that you can remain profitable. And so for a long time, rates were not approved. The amount of rates that these companies needed were not approved. And so we were already in a situation where these companies that were admitted were not already operating profitable, right? And so they decided, hey, we just can't insure in these areas where we may be exposed to these giant claims until we figure something out and we're able to charge the appropriate rate. And that makes sense from a business standpoint. If you're overexposing yourself and you're not getting the right amount of premium for it, then you just have to decide to remove yourself from that area. And that's fine if it's only 1, 2, or 3 companies. But unfortunately, we've seen the bulk of them decide to make these adjustments. And that's why it's been so difficult to get insurance really anywhere in the state, but definitely some of these higher risk areas.
Okay, what would be your recommendation to people that live in these high risk areas? What's their insurance options?
If they're already covered by a company they are familiar with and they're not completely put out on their rate and it seems like a reasonable rate, the recommendation is to hang tight to that policy, right? Obviously, review it with your agent, make sure you do have enough coverage, and everything is exactly how you want it to be. You don't want to be calling in on claims day asking questions. You kind of want to know what your policy pays prior to that. That's the number one recommendation. If you are in a situation where you have gotten dropped from your carrier or you're buying a house in one of these areas, that becomes a little bit more tricky. And what you want to do is probably talk to an insurance broker who has access to multiple companies in the state and not just a one, because unfortunately a lot of those captive insurance agencies from those brand names, they're only going to have that brand name and maybe one or two other options that they've partnered with. A broker is going to have many more options. They're not going to have loyalty to one specific particular company. So you might end up with at least a couple options to consider over the FAIR plan, which of course is available for anyone. It has to be. So that would be the overall recommendation, is just get connected with an insurance broker. And again, if you have a policy that is reasonably priced, hang on to that, make sure it doesn't lapse, and hopefully the market does get better.
So for those of us who this is maybe complicated, and aren't familiar, we're talking about insurance. Can you just go over again how the wildfire related or the fire related claims have basically, since they've increased significantly, how does that impact the insurance availability? How does that affect your ability to get insurance?
Well, the larger of a chance that the area in which your home is at has to have these wildfire events, the less companies are going to want to even participate in insuring in that area. And then the ones that are left, they need to make sure that they are charging enough so that if an event happens, they can actually pay these claims. So the availability gets really, really constrained when you're in an area that either has wildfire activity in the past or has the chance of wildfire activity in the future, right? If your home's on a hillside with absolutely nothing between you and the brush, and we know in California we get very long dry stints. That's kind of part of what led to what happened here in LA. And if there's nothing blocking that really dry hillside to your home, then a lot of the insurance companies are just going to say, well, no way, because if one spark on that hillside and your house is in direct danger of that fire, if they can't catch it soon enough, the chances of your home being damaged by a fire there are exceptionally higher than if you're far away from any kind of brush exposure.
Does the standard homeowners insurance cover wildfire damage?
The standard policy does. By nature, fire is one of the major perils or types of loss that is covered in a homeowner's insurance policy. It has to be specifically removed or excluded for the policy not to be covering it. And if you're looking through your policy and you're trying to figure out if this exclusion exists, you're going to look for something called a difference in conditions endorsement, or DIC. That is usually what the companies will put on a policy if they are specifically excluding fire. But by and large, most policies will include fire coverage as one of the major types of losses in an insurance policy.
Okay. So people talk about this FAIR plan. So I don't even know what that is. Can you tell it? Do you know? And then the difference between this FAIR plan and the traditional home insurance?
Yeah, so the California FAIR Plan is the state-run public insurance company funded fire insurance program. So if you are in a situation where you can't find affordable homeowners insurance in the state of California, you've checked all your resources, you can't seem to find anyone that can insure you, the state has set up this California FAIR Plan that is a guaranteed issue policy. You have to be approved, essentially, and they will cover your home for fire only. It is strictly a fire policy only. And then you would go and get a supplemental type policy to cover in any gaps that the FAIR Plan does not cover. And so you end up getting two insurance policies for essentially what the normal coverage of one would be.
Okay. So how do you know if you're adequately covered for a wildfire?
Every home is different. So you want to insure your house for the cost it would take to rebuild it from scratch. That is the goal for any homeowners insurance policy. We call it estimated replacement cost. So we look at it from worst case scenario, if we had to rebuild this property from the ground up, what is that going to take? What is that number? And that's the number that we need to insure. And that's going to vary based on the size of the house, the number of stories, the quality, the quality grade of the materials used, of course. All of those things are going to play into the factor of how much a home would cost to rebuild if they had to and if they experience a total loss. And that can be done, it should be done with your agent or broker. Just calling up and if you asked, hey, can we go through the replacement cost of my home? They should all know what that means. And we have systems and calculators to help us come up with this number. We don't all know off the top of our heads how much it would take to replace certain things, but almost every insurance company has a tool that we can use to go line by line, enter in how many bathrooms, how many bedrooms, is it an above average or custom grade, and come up with a number based on claims data and current cost of materials to come up with that number of how much to insure your property for.
Are there any like state laws or regulations affecting the insurance coverage?
Well, yes, any company that is an admitted carrier that has to follow the guidelines and regulations from the Department of Insurance, anything that they say, they have to follow those. So, I mean, I don't know exactly like what specifically you're asking for.
Well, I was just curious, like how they like establish what government agencies are kind of like dictating what the insurance companies have to, that's a bad word, but what government agencies are basically putting out the standards for what the insurance companies have to do and telling them what to do. Yeah.
Yeah. It's the Department of Insurance, or DOI. And that's they have the head of Department of Insurance, and then they work closely with the governor as well. So those two are constantly working to help regulate the insurance companies that participate in insuring Californians. And so that's who kind of comes up with the regulations.
Okay. So let's say I lived in Pacific Palisades and my house burned down, which a lot of people's houses burned down completely. What's the process of filing an insurance claim? What do you do?
It looks a lot like any claim. There's no special claims department for fire versus water for most companies. So you'd file a claim through your insurance carrier's claims department. You would be assigned an adjuster. The adjuster works with figuring out the scope of the loss and everything like that. And it goes very similar to any other claim. They do have special filings for situations like we just experienced. They're called CAT claim departments, or catastrophe claims. If a large enough area is affected by the same event, it's just a different way for these insurance companies to be able to expedite payments faster than they would if it was a singular event, right? But it still goes through the same process as far as a consumer is concerned. Calling into the claims department, getting an adjuster assigned, and then working with, eventually when the rebuild starts, different contractors and stuff like that.
So one thing that happened which people are talking about, is a lot of people have revocable living trusts, and they have their homes in revocable living trusts because they don't want their loved ones to have to go to probate if they were to become incapacitated or pass away. But a lot of these homeowners forgot to tell their insurance companies that they have a revocable living trust, and the house that they insured was placed into a revocable living trust. Now that it's gone viral saying that, oh, we can't get our insurance because we forgot to tell them about the revocable living trust. Is that true? Or like, why is that such a hot topic right now?
It's half true and it's situational. So usually if your home is in a revocable trust, and you are still alive, if you are, the trustees or the grantors of that trust, then you're not going to have any issues, because the trust being on the policy while you're still around is a liability type thing, right? So having the trust on the policy, make sure that the trust is also protected from a liability standpoint. Where you may run into issues, and this might be where those posts have come from, is if your home is in a trust, the trust was not listed, the people who set up the trust are no longer here with us. And now the kids as beneficiary or whoever that might be is now having a hard time getting the claims payout because the trust was never added on that. So if
I see.
the people who set up the trust were still around, it's pretty easy. Okay, well, you need to get the trust added, but here's the claims payout to you. Do what you need to do. But if those people are not around and now you just have the beneficiaries and there's no trust listed on the insurance documentation, they can't legally send payments to someone who has their names are not on the policy at all. And that's where you're probably running into issues. Not just, I put my home in a trust and now they won't pay me type situation. That's not what's happening. The other thing that could be happening as well with some carriers is if you have a irrevocable trust where it's almost its own entity now. You don't legally own the house, the trust does. That's where it can get complicated as well because they're going to want to make the payments out to the trust or whoever the named insured is. So that's where you can run into issues. You're probably not experiencing any problems again with that first scenario where you just have the home, it's in the trust, you forgot to add the trust to the insurance, you're still around and the insurance company is now holding your money. That's not what's going on. Still though, the recommendation is if your home is in a trust, to avoid all this questions, all these, potential issues, you put the trust on the insurance as well, and then you don't have to worry about any of this.
So if I bought a house and I put my house into an irrevocable trust, let's just say, I need to contact the insurance company, let them know that's irrevocable. Is that gonna affect my rate, or you
It's
don't
gonna
know?
vary. It's gonna vary by carrier. So
Okay.
some carriers will want that policy rewritten since it is a different entity that now owns it. It'd be almost like you sold it to another person at that point if you put the home and transferred the title into the new irrevocable trust. That is another entity that owns it legally. So
Yep.
some carriers are going to want that fully rewritten into a new policy. There are going to be other insurance carriers that are okay with adding on the irrevocable trust as an additional insured party. And then that kind of fixes that and negates having to rewrite the policy. It's going to vary between carriers. So just check with your insurance company and they'll be able to guide you through that process.
Okay. So now let's say I decide that I have this house, I bought it, and all of a sudden I'm not going to live in it anymore. So I want to put it in an LLC because I'm going to now rent it out. What happens with my insurance then? But I forget to change the insurance. That means I need to make sure to contact the insurance company.
It is technically, the policy is technically null and void at that point, right? For
Okay.
two main reasons. One, if you switch that entity to an LLC and you don't notify your insurance company, and you are the named insured on the policy and something happens, that LLC is not protected, right? So that's one big issue. And then the other issue is if you are now renting it out, that is a completely different exposure and it's actually a completely different policy altogether.
Okay.
Right. So a landlord situation, that insurance policy looks a lot different than a owner occupied insurance policy from our end. From the consumer side, you may not think much about it, but it is written completely different. It's on a different policy form. Some carriers don't even offer that type of coverage, and some only offer that type of coverage. So any kind of change in the occupancy or title of the home is always super important to talk to the insurance companies.
Okay, so let's say my house in the Palisades was an LLC, and it was an LLC because it's family business or something. And I forgot that my insurance was in only my name, not the LLC. I'm probably in trouble, huh?
You might have some problems. Yeah.
Yeah.
Again, it's gonna depend on the carrier and how they see it. From a payment dispersion standpoint, the physical structure, it doesn't really change from their side, who they need to pay. The bigger issue is liability, right? So if something happens, the entity or the LLC is not properly protected, that's where you get the, claims denial for sure. But to avoid any of that problem, you just want to make sure that the title of the property matches the insurance policy. That's the basic, right? However the deed is titled, you want that name on the insurance policy. That's pretty much the easiest way to think about it.
Okay, very, very good to know. I think that was a point of confusion for lots of people. So we know that if you put your house in an LLC or you put your house in a revocable trust or an irrevocable trust, you need to make sure your insurance company knows how the house is titled. Okay.
Exactly.
Very important. For these people that just lost their homes, what are most insurances covering? Are they covering all the rebuilding costs, all the items that were lost inside the home, living expenses right now, like temporary living expenses? How does that work?
All of those are basic coverages on policies, not assuming California Fair Plan, because those work a little bit differently. But if you have a standard insurance company, most of those coverages you just named off are standard coverages on that policy. So you're going to have coverage for your structure. You're going to have coverage for additional living expenses. You're going to have coverage for personal property and belongings inside of the house, right? Those are kind of very standard insurance coverages that are on most policies. The question is then, though, is the limits you have on the policy enough? And that's where people are running into issues or going to run into issues, is they maybe have not reviewed their insurance in many years, they haven't reviewed their limits. And so it's really important not to just make sure you have those coverages on there, but that they're actually going to be sufficient, right? In California, rent is super expensive. And if you have a big family and you need the same amount of space that you were in, Pacific Palisades or even some of the Altadena houses, your rent is probably going to be, $8, $9, $10, $12,000 a month. So a few $1,000s for additional living expenses is not going to go very far. So it's super important to review the limits as well as what's on the policy, making sure that you're properly insured for worst case scenarios.
So do you think that California home insurance is going to change drastically now that all these two disasters happen?
I do. Complete opinion here. Obviously, I don't have a crystal ball, but we've talked about it a lot over the last month, amongst other agents and stuff like that. I think that a lot of the companies that are already doing business here need to now reevaluate if they want to keep doing business here. There's a lot of data coming out that says this fire is going to be extremely costly to the insurance companies that are here already. And we don't know how that's going to impact their, ability to stay in the state. For one example, a certain carrier I will not name is, had about $2 billion in reserves for claims, about $4 billion in reinsurance coverage, which is insurance for insurance companies, but their total losses are expected to be about 10 billion, right? So they're on the hook for about 4 billion that is going to come directly from that company, right? And so that is a huge, huge loss for them. And so a company like that is going to need to reevaluate and say, okay, can we afford to be in business here in the state of California? And I think you're going to have all of these insurance companies have that honest conversation. And you may see some fallout. You may see some more carriers leave temporarily. You may even see some that decide that they can't do business here for the foreseeable future. And that's kind of just the unfortunate fact there.
Do you think that the insurance companies are going to make, what the right word be, stipulations on how the homes are built? So for instance, what if you build the home with concrete that can't burn in these zones? Would they ever do that?
I think it's something that they're working on with the commissioner and the
Right.
governor, because that is something that we've talked about as well. I don't think we can build homes like we used to, right? You got these essentially wooden homes with stucco on the exterior. There's not for California, how often we have fires here. We don't build that with a bunch of that in mind, right? Which is kind of crazy to me. Part of the chatter with the Department of Insurance and the admitted insurance companies is that the commissioner wants these carriers to reward homes that are built with fire resistant materials, fire resistant vents, fire retardant roofs and stuff like that. And so I think we see in the future some pretty nice discounts for homes that are built with that in mind, with some fire safety and mitigation.
Okay.
And so that could be a way to offset insurance costs a little bit in those areas that are prone to fires. So I definitely see that coming into play.
Okay. Yeah, I do too. I think it's interesting. Daniel, can you tell us a little bit about what services you offer and what it would look like if someone were to come to you to get insurance?
Yeah, so we're actually a property insurance focused agency. So about 90% of the business we do in California and Arizona is homes, residential, very small commercials, situation. So that's basically all the business we do is property focused. And we also have more options than most as far as carrier selection. We've done a really good job at partnering with the companies that do want to come in and grow in the California market. A lot of excess and surplus companies that usually are reserved for higher risk areas haven't had a lot of leeway in the California market. I think we're going to see a lot more of those companies come in and try to, help in areas where these other admitted companies don't want to do business, because we have to have insurance options for people. So these carriers, yes, they'll be a little bit more expensive than the average insurance company, but it'll be an option or a couple options away from California Fair Plan and just more comprehensive coverage and stuff like that. So so we offer mainly property insurance, also all the other lines of insurance as well, but that's where we really shine, is anything property related.
If someone wants to review their insurance with you, what do you need from them?
Yeah, easiest would be a deck page, a current copy of your policy, and a phone call. And that's about all we need to at least get started and see where you're at as far as coverage and options.
Okay, amazing. Well, thank you so much. This was helpful, especially with everything that's happened. I know a lot of people are nervous, and most people's main asset is their home. So the fact that you could just lose it and then maybe not get it replaced is extremely scary and devastating. So
Yeah.
this was helpful information. I appreciate you talking to us today.
Yeah, appreciate you having me on.
If you've enjoyed today's episode, please consider subscribing to the Business Talk podcast and leaving us a review on your favorite podcast platform. Your feedback helps us grow and improve. Thank you for joining us today. This has been another episode of Business Talk with Meghan McNulty.